Welcome back with another episode from Make Florida Your Home and Ryan Scarrett. We are the largest real estate website in the state of Florida, and today I want to give you some insights and tips and tricks regarding the FHA loan. The FHA loan is a fantastic loan program with a 3.5% down payment, flexible credit scores, flexible ratios, flexible underwriting requirements, and flexible appraisal requirements. This is many people's vehicle that they use to buy their first home. So today I want to dive in on some insights, some problem solving, stay semi-surface level, but at the same time give you some topics to think about and help you overcome some hurdles you may think that are preventing you from becoming a homeowner. So the first thing is the down payment. The great part about the FHA loan is this down payment only requires 3.5%. With that being said, when people are considering buying a home, because we have this flexibility of this low down payment, we can use the cash we have saved up to help the credit profile in other areas. An example of this is take some of the money that we may have planned on putting down and address some areas of concern on our credit profile. A trick we use all the time is taking some of the proceeds, using those to pay down debt, which will allow us to qualify for more home. So this low down payment is the pillar of being able to have a configuration and a mortgage plan where you can be flexible and help you get into the house that you want to get into. Next thing is a credit score. They accept credit scores from 580 all the way up to high 800s, right? A lot of people use this loan for a variety of reasons. And if your score is below 580 to 500, you can still use it. You just have to put 10% down. So with this being said, sometimes people with great credit profiles still use this mortgage specifically to purchase 2, 3, and 4 families because some of the boundaries and hurdles that you have to go through when purchasing multifamilies, like reserve requirements. Just recently they made it so you could put down 5%, but it used to be 15 or 25%. There were some real hurdles where people were able to use this program to get in the property that they want. How do we figure out your credit profile and what we need to bridge together some of this information so we can come up with your plan? And people get overwhelmed by this, but it's not that big of a deal. Month of pay stubs, past 2 years W-2s, you may need your past 2 years tax returns, what's in your bank statement, so we take 2 months bank statements and a copy of your photo ID. Now, if there are income streams like commission, bonus, or overtime, we may need year-end pay stubs for the past 2 years so we can finalize that math. But once we have those pieces of information, we can really start tailoring your home buying blueprint so we can put together the math and figure out where do we need to sharpen the pencil? Where do we need to maybe overcome some of these obstacles? Is it credit score? Well, that's great. We can use some of the money we were going to put down and address maybe the utilization, maybe pay a card off to boost our debt, to lower our debt to income ratio. So putting that credit profile in stone is what's going to help your lender be able to get very granular on fine-tuning your plan to help you get into the house you want. Appraisals. This is something we get all the time. And my insight to this topic is don't let it prevent you from buying the house you want. Oftentimes I have people come to me and they say, I love this house. I just feel like it's not going to pass the inspection. Well, let's fix that. If it's paint, if it's a hand railing, if it's something electrical, if there's something wrong with the roof, typically with these houses, you have a seller who's motivated and willing to help. Before the appraisal happens, in my experience, I get on the phone with the buyer's agent and the seller's agent. You can be there if you want to. We talk about the issues. We talk about maybe our buyer's skill set, maybe our buyer's friend group. We talk about what the seller can bring to the table. And we as a collective come up with a plan on how are we going to address these concerns before the appraisal happens. So we get ahead of any of these issues, fix them, and then execute the appraisal. Now let's talk about worst case. We have an appraisal. It comes back what we call subject to. This can be disheartening. It's not the end of the world. All subject to means is X, Y, and Z is wrong with the house. It's now on the buyer and seller to rectify whatever's wrong with the house and repair that. Now, if it's minor, not a big deal. If it's substantial, this may be a good thing for the buyer. The seller may now know and have to disclose that this is an issue, and this may be something that they're going to be forced to take care of. Well, they might as well do it with someone that wants to work with them and acquire their property. It opens up conversations. Sure, sometimes in life, conversations are uncomfortable or unforeseen. However, if you have a proactive approach and you have a skill set like my team does, we overcome these obstacles every single day. Another component to that, I've hundreds of times had a property start out as what we call a 203B. So this is a standard FHA loan. Appraisal doesn't go well, home inspection doesn't go well, buyer's upset, seller now has all these issues. What do? Switch it to a 203K. A 203K loan allows you to take your purchase price plus any of the repairs that need to be done to the house, use a contractor. There's two components to this, a limited, which typically the work's sub 30,000, and a full, which if the work's 30,000 or above, we work with the contractor, get what we need to meet the 4000.1 handbook of appraisal requirements, add that into the loan amount, close on the loan, and about a week after, the contractor gets going and starts fixing your home. So when it comes to a property that maybe needs some TLC or is on the fence of qualifying, this is a collective. We work together. We solve it using the standard, or we pivot and go to the 203K, which I love because it creates sweat equity, aka money in your pocket. So don't let the appraisal scare you. Another thing that I really like to get into detail about is configuring your offer. Make the offer that's good to you. The FHA allows a seller to contribute up to 6% as a seller credit. This can help you with closing costs. This can help you get the ball over the line. So if you have to come out of pocket more, maybe if it doesn't fit the loan limit, or maybe if you only have the money for the down payment, you can use this 6% allowable threshold to go towards closing costs. So it also allows you to structure offers that will get you and make you a homeowner, even if the money on your side in your bank account doesn't necessarily allow for it. So oftentimes as I'm in the planning stage with our buyers, I tell them, listen, we're going to take care, you have the money to take care of the down payment, but we need to be putting in offers where we're getting seller concessions to address the closing costs. That's where this allowable 6% comes in huge. Final thing, how long does all this take? Typically I have these credit profiles come in, submit an application. Within 24 hours, I have the game plan in stone. I've had people get it on a Friday and be putting offers in on a Saturday. When you find your home, I've closed these loans as fast as 15 days. So if you're in a time crunch and we need to be creative on how fast we move, we have the team that can deliver. It's sometimes disheartening where you have lenders tell you it's going to take 30, 60, 90 days based on what they're looking at to make this a reality when you have to make a move and find a place for your family to live. So with that being said, speed wins. And that's another big component that my team can deliver and help you overcome any objection. Time, underwriting guidelines, property in regards to the appraisal. We found the answer and we lead with yes. If you're working with a lender or a bank that's starting with no, or they look at some pictures on Zillow and they want to blow up the opportunity for you and your family to move into somewhere you want, you're not working with the right person. Work with a set of experts and a team that is built on speed and communication, and utilize these insights and solutions to help yourself become a homeowner. We have over 35 years of experience, billions of dollars of mortgages funded. Give us an opportunity to be a second look, a first look, a final look, whatever you want, but don't get discouraged. Work with a team that leads with yes. Thank you so much for spending time on this insight blog, in this insight video of how experts on our team view the FHA loan. It's one of our favorite loans, and it's a loan that we've seen thousands of home buyers use to become a homeowner. Do yourself a favor, take a look at it. All of our contact info, the link to the blog is going to be in the description, and we look forward to connecting with you and making your goal of home ownership a reality. Thanks again. This is Ryan Scarrett with Make Florida Your Home, and have a fantastic day.